Rates hit an 11-month low. Refinance is on the rise. The 10-year Treasury yield is plummeting. A lot happening. This is a weekly update. It is Monday, September 8th. I'm here with Gary. How you doing, Gary?
Doing great, Clark. What's happening?
No, we're just starting to see a little bit of a swell. I'm not gonna say it's a full-blown wave, but it's a swell.
Things are moving.
It's time to get the wax on the surfboard. Maybe start to think about riding a wave. Just a reminder, smash that like button. I mean, smash it. Leave us a comment.
Let's go.
This is our second of these weekly updates. So why don't we start, Gary, with kind of rates, where they are now. They've hit an 11-month low. What are we thinking this week is going to bring?
Yeah, so this is going to be a tricky week. CPI on Thursday. Last week was big. We had jobs reports. And if you're following any of the jobs reports, there's a ton of discrepancies. This has been an ongoing, we talked about in a previous video, the BLS numbers versus ADP and some other agencies. So there's a big discrepancies. There's been some revisions down. A lot of it has to do with just I'll call it the archaic
nature
and in nature of the way these jobs numbers are reported. And it's essentially, if you don't know, these job numbers are derived out of a survey sent to business owners. So why we see such a tremendous gap in the numbers is they get more data in after the fact, after the numbers are released. And so when they reconcile those numbers here recently, there's been a tremendous amount to the downside, to the tune we had our first in like 24 or 5 years of negative job growth. Yeah, June's numbers came in negative. Yeah, just a lot of volatility in those numbers, which, again, makes it very hard to make policy. So this isn't a Fed problem. The Fed's doing what they can based on the data they have.
Yep.
So we could probably have a whole nother podcast on why and what needs to be changed. As your question originally was, what's rates look like? Conventional loans are somewhere in that kind of low 6 range, 6.25 to 6.5, somewhere in there. If you're FHA VA, you're probably talking about the 5s somewhere. Yep. So yeah, it's starting to get interesting. It's whether you're refinancing or purchasing, you're probably saving a couple $100 a month than you were, I don't know, 3-4 months ago.
And you look at the 10-year Treasury yield, it's fallen off a cliff. So that combined with the news on the jobs front certainly feels like applied pressure for rate cuts. What's your take there?
Yeah, I definitely think the Fed is more concerned with the employment side of the equation versus inflation. I think obviously they're always going to have their eyes on inflation. I mean, really, their number is 2% versus what we've been around that 2.9%. And I think they're comfortable given, GDP numbers have been pretty solid over the last, couple quarters, especially the last one was revised up to, I think, 3.3, 3.5, somewhere in there. So yeah, I think you're going to see a rate cut next week, next week from the Fed. Will it be a quarter point, a half a point? Probably a quarter point, just because I think a 50 basis point could send some pretty big ripples into the economy. So, but I do think that's coming. And it's important to note that the talk of these rate cuts, that stuff's baking in on our side, mortgage rates first. The day of that cut is not going to see, and it could, it depends on what other data is out there, but typically we're not going to see, you might even see a little tick up in rates.
Because they over-adjusted.
They over-adjusted, and now we know. Yeah. And so it's kind of like the stock market where, Apple talks about a new product launching in 90 days. The stock goes through the roof. The product launches, it sells off. Everybody takes their profit. They get out, then they buy in again. Yep. You know what I mean? So it's the same thing on the mortgage side. They're buying. It's pricing in now ahead of the actual event. When the event of the rate cut happens, TBD. We'll see. How that impacts us. But we're seeing positive gains. I mean, and if you go back to, call it the 1st of September, we're at 427 on the 10-year. Today, we're at 404. So, almost 25 basis points to the downside.
Significant.
So significant. That's a quarter point in rate. So,
and
slowly
to the point
but surely.
of the the rate reductions and how our lenders kind of factor it in. I think that's it's one of the benefits of us being a broker is, yes, lenders want to be competitive. They want to offer the cheapest salt they can to brokers like us to earn the business. So as Gary mentioned, talk of a rate cut, lenders will want to bake that in. So, I do get asked like, hey, rates were cut by 25 basis points. Why didn't we see any movement today? Well, it's been baked in, and they hit it on the head. So there might not be any more adjustments for a while, but major adjustments, quarter basis point adjustments. So it is a benefit of being a broker. We have lenders kind of competing over our business, which is a good place for our customers.
Absolutely. Yeah, I think it's, Thursday's a big day. CPI, we could give some of it back based on CPI numbers. If it comes in at expected, might not give as much back. If it beats, if inflation comes in lower, then you'll see a bigger drop in rates, meaning inflation's starting to come down even more than expected. All indications are, we're going to come in at that number, and hopefully not too much higher for the readings on CPI on Thursday.
Well, we will be back next Monday. We'll give you a kind of a debrief of what happened with CPI, how it impacted numbers, and hopefully have some more solid news about rates and rate cuts from the Fed. So thanks, Gary, for the update. Appreciate it.
Absolutely.
Again, if you're thinking about refi, whether it be cash out, rate and term, whatever you need to do, get ahead of it. Get a mortgage plan in place. Get in touch with us. Let's figure out what number makes the most sense so that we can start tracking for you and strike. Because as Gary mentioned, there is volatility in the market. There is some up and down. So we want to be positioned, have everything dialed to strike when that number comes up for you. So we'll be back next week. Gary, thanks as always. Everybody, again, give us some feedback here. We'd greatly appreciate it. Smash that like button, and we will see you next Monday for another weekly update.
Sounds good. See ya.
See ya.